Okay, so welcome in. Today we're going to build on our SPAC video and give a specific example of the Nikola going public transaction. Okay, so in this video we're going to build on our previous SPAC video and talk about the company Nikola going public. So like I said, we're going to give a specific example of a going public transaction. And in this case, we're going to use Nikola, the hydrogen truck maker company. So they set up a special purpose acquisition company, or a SPAC, known as Vectel Q Acquisition Company. And that was a blank check company formed. There was 20 million units offered. And again, as we mentioned in the previous video, each unit in a SPAC usually consists of a share of common stock and then a warrant or some level of warrant to purchase more common stock. So in this case, you've got 20 million units offered to the public, and that's one share plus a 1/3 warrant to purchase another share at $11.50. So that's what they were offering to the public. They ended up oversubscribing a little bit, and they got $230 million from the public. They also had what was called a PIPE investment, and that is just a private investment in a public entity. And what that is usually kind of blue chip, large institutional investors that will invest in a company, sometimes at a lower price than what is currently offered to the public, and it's usually just a big block. And it's many times from newly issued shares and things like that in a developed company. In this case, it's just a deal that took place outside of this public IPO process. It was 52.5 million units basically that were purchased in the PIPE transaction. So they had the private investment in the public entity, and then they had these 20 million units that were offered to the public. And as we mentioned before, there's the idea of the shareholder vote with SPACs that many times takes place. In this case, they didn't need to. They had enough cash that they were able to allow the public investors, at the point that this Vectel found its private company to purchase, they would be able to offer a tender offer to the current shareholders if they didn't like the transaction, to allow them to get out of it, and that allowed them to avoid a shareholder vote, and to also, give confidence to the public and to the PIPE investors if they wanted to invest, knowing that, that tender was available. They also did set up a sub, so they had a merger sub set up. And again, if any of this doesn't make sense, go back and watch the first SPAC video where we talk about what an actual SPAC is and kind of how it's set up, these special purpose acquisition companies. And I'll put a link to that in the description below here so you can see that. But they did do a merger sub setup. So the entire capital structure of this Vectel Q acquisition company looks something like this. When they got to their target transaction, their target company that they wanted to purchase, which was Nikola, you got this merger sub. They want to bring this private Nikola company public. So when they purchase this 21%, they merge together. The newly formed company is this NKLA, which is a wholly owned subsidiary of Vectel Q Acquisition Company. They looked roughly like this. There's a little money, and I mention it down here. There's some founder money and shares that were allotted to the founders of this company. But for the most part, the capital structure and the capitalization of this acquisition company was the $230 million raised in the public offering and the $525 million of the PIPE money. That capital structure and group was used to purchase what was negotiated out to be 21% of the equity in Nikola. They set up this capital structure, this merger sub. This merger sub here had the money. This capital structure, and via this merger sub, purchased 21% of Nikola. When that merger occurred, the new company that was formed was NKLA, basically Nikola, which was a wholly owned subsidiary of this Vectel Q acquisition company. And the way that looked once that was purchased, once this roughly $700 million, and again, I'm kind of going by rough numbers. There was $50 million in transaction fees and that were necessary. There was a $70 million payment to the founder, Trevor Milton. So some of that came out, and basically about $709 million was actually raised by Nikola in this going public transaction. So again, this merger sub purchases 21% of Nikola. At that point, they're merged. The newly formed merged company is this NKLA, Nikola as we know it today, the public company, which is formed. And that new company is owned by 77.1% by the Nikola shareholders, 6.4% by the public owners, this public money, 14.6% by this pipe money, and again, like I said, 1.9% by some shares that were allotted to the founders of this acquisition company. And you can see that this values the transaction at, I think, about $3.5 billion, which makes sense. That's kind of what it went public at from the market cap. So that's the amount of money that they negotiated in doing this reverse merger. Again, after the fees and some of the payments made, the reverse merger netted Nikola about $709 million. And for that $709 million, they gave up, roughly, 23% or something like that. A little under 23% is what that cost them. So that had the whole enterprise value of roughly $3.5 billion, and that is what they went public at. So again, we just kind of wanted to do a quick example of a transaction. We had some requests to do a video on a specific transaction. We're going to do one more after this, one more company after this, and then hopefully you've got it there. And if you've got any questions or any comments, as always, please put them in the description below or below the videos. We'd love to hear from them. This video was actually sparked by a comment. Someone wanted to see some examples. We're doing Nikola on this one, and then we'll do one more here coming up as well. So thank you for watching. Again, if anything was kind of seemed a little odd, or not explained well, please go back and watch that initial SPAC video. Again, I'll put that in the description below. Thank you.